Hey, family, welcome to the Head of Household 2025 W4 video. Just as a friendly reminder, the updated W4 is due to your employer by February 15th. So, I just want to also remind you that not everybody qualifies for a head of household. To qualify as head of household, you have to be unmarried and pay more than half the cost of keeping up a home for yourself and a qualifying individual. This can be a minor child, or it can be a child who is not a minor, but still eligible to be on your health insurance and a full-time student, and you're keeping up more than half the cost of keeping up the home for both of you. In addition to that, it could be a qualifying relative if the person is not a minor, not in school full time, but they are disabled. Okay? If you are married, your spouse cannot file as single and you file as head of household. If you are married, the only exception to you filing head of household is if you did pay more than half the cost of keeping up a home for yourself and a qualifying individual, but you and your spouse had to have been separated for the last 6 months of the year. All right. Now that we got that out of the way, let's start with step one, entering your personal information. So we see here in box A, we need the first name and middle initial that matches exactly with what your social security card says. So in today's example, we have Daniel E. Tanner. Now, if you know who Daniel E. Tanner is, drop that down in the comments. All right. For box B, we have the social security number, and this also needs to match exactly with your social security card. All right. We have the address here, 1882 Girard Street, and Daniel Tanner lives in San Francisco, California. 90851 is the zip code. Now, for Daniel Tanner, we want to make sure that his most recent address is on the W4, okay? So you may be thinking, well, I just moved. Which address should I put? You want to put where you live right now because if there's any correspondence that needs to happen between you and HR or when your W-2 is filed, you want to make sure that your W-2 goes to the address that you live at now, okay? We talked about qualifying for head of household. So in this situation, Daniel Tanner is a widow, but he has three daughters. Okay. So although he is single now, he's going to be head of household. Now, there is something called qualifying surviving spouse. So, because Daniel is a widow, he could potentially use the qualifying surviving spouse designation for the first 2 years after his spouse passes away. All right. And maybe I'll cover that in a different video. But for the purpose of this one, let's continue. And Daniel only has one job. So we can skip step two, okay? We only do steps two, three, and four if they apply to us. So for this next part, step three, as I mentioned, he has three daughters, okay? They're all under the age of 17. So for the tax year 2025, the credit for each daughter is $2,000. So we would go three times the 2,000 to get 6,000. Okay. Now, if you're familiar with Daniel Tanner, it may be debatable whether or not we're going to put Uncle Jesse or Joey as his dependents. But per IRS rules, neither of them is disabled, even if he is paying more than half of the cost to upkeep a home for them. All right. So they are not going to be qualifying dependents. So we are going to have the total for step three be $6,000. Now, this is important because this is a credit, which means that Daniel Tanner is going to have his actual tax liability, the amount that he owes, reduced by $6,000. Now, moving along to step four, other income. This would be if Daniel had something like dividends, if he was trading stock or had interest from his bank account. We would want to take that into account right here. Okay. And what that does, it allows you to have less withheld because it factors in the deductions that you are going to get. Okay. And actually, excuse me, with other income is actually going to withhold more, not withhold less, because we're factoring in your other income that doesn't have withholding, such as dividends and interest. Now, here in 4B, if Daniel itemized his deductions, which means he takes into account his mortgage interest, his charitable contributions, and his state and local tax, he would put those here. But please note, he would only put those here if those things are going to be more than the standard deduction. For 2025, the standard deduction for head of household is $22,500. So if Daniel's itemized deductions are going to be less than that, we're going to leave this at zero. Okay. Now, if Daniel has owed in the past and he wants to have a little bit extra withheld, he could put the amount per pay period he wants withheld here in 4C. Okay. Now, if that doesn't apply to him, we would also skip step four and Daniel would sign this, date it, and turn it into his employer. But just for the sake of the example, let's make things a little bit more interesting, okay? Let's say that Daniel has multiple jobs, all right? So we're going to look at step two, and one of the things that we can use to get a precise number for how much should be held additional is to use the withholding estimator on the IRS website. We see the information here in 2A, where you can go to irs.gov /W4 app. Now, if you are looking at this electronically on the PDF, you can actually click this and it will take you straight to it. All right. But for us, we're going to go to the worksheet that's provided on the W4 and we're going to figure out the number or the amount rather of additional withholding that Daniel should have. So let's go down to the worksheet because some single parents do have multiple jobs, correct? So we would want to go to the last chart, which is for head of household. All right. And let's say that his highest paying job is 80,000. And then he picked up a part-time gig that is 30,000. So we want to go to the higher paying job here in the column. So right here. And then we said his other gig is 30,000. So we would go right here and we would see where those two intersect. So in this example, he needs to have $7,060 in additional income withheld. All right. Now, before you flip out, he doesn't need to have that withheld every pay period. That's just the amount that needs to be withheld throughout the whole year. So what we would do is take that $7,060 and we divide it by the number of pay periods left. So let's go back up here. In line 4C, where we select the extra withholding, we would take again the 7,060 and divide that by the remaining pay periods. So if you're doing this in January, you may have 25 pay periods left for the year. So that would look like $282.40. Now, this 282.40 doesn't have to come from one employer. If Daniel wanted, he could take the 282.40 and divide it in half and have 141.20 withheld extra from each employer each pay period. Okay? It really is all up to you. The majority of people, though, have the additional money withheld from the higher paying job. But take this into consideration. We said the lower paying job is going to be $30,000. When Daniel turns in his W-4 and he has head of household, that employer is going to automatically adjust and not withhold anything until he makes $22,500. That means hardly anything is going to be withheld from that job. So in Daniel's situation, it may make more sense to have this 282.40 withheld from the job where he's making 30,000 because they're not going to be withholding that much at all anyway. Okay? So that's what would happen if we have a situation where you're head of household, but you have multiple jobs. Let's say that there aren't multiple jobs, but one of your children is not under the age of 17. Maybe they're going to turn 17 in the 2025 tax year. Using this example with Daniel, what we would do is reduce this by $2,000, right? So he has two daughters now under the age of 17, and one will be 17. This is important to look at for your taxes because sometimes people don't have enough withheld because they keep their child on in the $2,000 area when they're going to be turning 17 before the tax year ends, and they should have adjusted and moved them down to the 500. Okay? So any dependent that's over the age of 16 only qualifies for a $500 credit, not a $2,000 credit. So that's a $1,500 difference. All right. So if you have children that will be turning 17 this year, it doesn't even matter if their birthday is December 31st and they were 16 the majority of the year. When you go to file your taxes in 2026, they're going to only be eligible for a $500 credit. Okay. And then last but not least, remember again, the standard deduction for head of household in 2025 is $22,500. That means you're not going to be taxed on the first $22,500. So if you make, let's say, $40,000, right? And you're in a situation like Daniel, where we have two children under the age of 17, and then we have one that is 17, and you have a $4,500 credit. And remember, this credit is going to be dollar for dollar, reducing your tax liability. Your 40,000 is not getting taxed. It's 40,000 minus the 22,500, which means only 17,500 of your income is being taxed. And when you're head of household, you get to stay in certain tax brackets longer. So for the sake of this example, to make it easy, I don't remember top of my head how much of this is 10% and how much is 12. Let's say your 17,000 is taxed at 10%, okay? That means your tax liability is only going to be 1750, so $1,050. You have a $450 tax credit. So what the IRS does is they take that into account, and instead of withholding for you, they've already figured that your credit is going to be higher than your tax liability. So if you are head of household and you're in a situation where you're making $40,000 to $50,000, if the IRS isn't withholding that much, it's okay because what they're doing is already factoring in your child tax credit for you. Now, if you would like a bigger refund and not as much money throughout the year, you can adjust this and not have your children listed here as tax credits, okay? Because then it will withhold more and you'll get it back in the form of a tax refund. So the choice is really yours, but don't be alarmed. Again, if you're making $40,000, $50,000 and you have multiple children and you don't see much being withheld from your paycheck. All right. If you have any additional questions, please let me know down in the comments. If you're new to the channel, make sure you like this video and subscribe. It would do me great pleasure because my name is Timalyn Bowens. I'm America's favorite EA, and I'm here to fill the tax literacy gap one taxpayer at a time.